Hey, good morning, everybody. Just getting started. It's about 8:30. I'm going to do a little video on stocks to watch. ZOM, not one of them. I did want to preface this video at the very beginning with talking about being aware of a lot of the pump and dump situations in the market. So typically when, I always talk about volume. When you have large amounts of volume, it's usually going to create momentum. And so looking at a stock, let's say, for example, like ZOM, when you look back at a lot of these stocks, either you'll see a scenario like this, or you'll look back at the chart and you'll see basically like the stock will shoot up and then within a couple of trading days will shoot right back down to this normalized level, shoot right back up, and then normalize to this level. And so you always have to be careful when people, or if you hear of people promoting certain types of stocks. Usually what you'll see, like if you look over here, when you look onto the side, you'll typically see what look like very lightly traded stocks. They might be in the hundreds of thousands of trades. Like you'll look at the day, how many shares were traded. It was maybe like 100,000 or 200,000, 300,000. Those stocks are typically very easily manipulated. And all of a sudden you'll see huge amounts of volume into the millions of shares. And then you'll quickly see what looks like this. So in scenarios like this, if you're going to play certain stocks like this, typically you want to get in on the first or second candle. The reason being is once you see the large spikes of volume like this, the play is typically over. And so you have to be really careful on scenarios like this where you might look to get back in thinking that the stock is just kind of trading sideways. You're going to wait for some more volume and then maybe it will shoot to the upside. Again, more times than not, when you're dealing with penny stocks and typically stocks that are under $10, you may look at the charts and you may see this sort of thing where the stock will just, it'll be like nothing will be going on. The stock will be trading sideways for months. All of a sudden the stock will shoot right back up out of nowhere, and then it will meander and then come and settle right back down. And so typically in these scenarios, what you look for is you look for the volume to the upside, especially when you see like these 2 days where you see the large spikes and then immediately what happens? The volume dries up. And so these are people who are basically holding the bag, right? And so you don't want to be a bag holder in these sort of scenarios. Another example is, this is another one like Genus. This is a good example, right? You look back at the chart and you'll see the chart kind of trades sideways. Right, it's usually scenarios like this, right, where the stock trades mostly to the sideways, and then you see this huge movement to the upside, and then what happens? You look back at the chart, and you should see it right here, right on the huge volume, right? Then you see a smaller down volume day, and then of course you have all these people over here that are holding the bag, and then eventually the stock trades sideways for a period of time, and then you see the exact same scenario again. And these are typically manipulated stocks. If you look back over at the volume, you'll see the volume is typically like 10 million shares, 13 million shares, and then all of a sudden the volume starts to really pick up, right? You'll see a 60 million volume day, followed by a 215 million volume day, and then another 162, right? And so these are typically scenarios, someone in the chat room or, someone popular will promote a stock, or you'll hear multiple groups of promoting these type of situations, and then the stock shoots up, everybody starts to hear about it in the chat rooms, and everybody starts to get in. And of course, as you're getting in, they're basically feeding you their shares that they were promoting. And so I always steer clear. When I was a day trader and I worked in a proprietary firm, this is the stuff that we typically would do. As a group, we'd shoot in with a large amount of volume, either to the short side or to the buy side. And of course, it would show up on the ticker of like, if you're following, like, for example, if you're following like a high volume or a large bid. Back in the days, we used to use a lot of filters. And so we would pop up on the filters and then people would see it. And then we would push the stock into a particular direction. And then we would sell people our shares as the stock started to move into a different direction, as the stock started to move up or down. So this is what you typically see in a lot of these scenarios, like Nokia and what's going on, for example, with GME might be slightly different, might be, but the scenario looks exactly the same, right? The scenario looks exactly the same in a stock that's trading sideways, that gets pumped up, and then eventually will come crashing down. As you can see, this stock was trading was trading sideways for a very long time, and then of course out of nowhere. But this might be slightly different. I just wanted to touch on that because I know there's a lot of people who are talking about these type of stocks or these type of scenarios. And you want to be real careful. If you get involved in these situations, you don't want to be holding overnight typically. Yes, you might miss out on a gap up or a gap down, but that's kind of the scenario. You know, it's risk versus reward. And if you're going to be risking some money, you typically don't want to be risking too much. Some people, as they say, will shoot for the fences and they can make a lot of money. Some people can lose a lot of money. They can ruin their portfolio or basically wipe out their account on plays like this. And so I typically steer clear from these as I'm looking for slow and steady plays. You know, money and wealth is built up over time, not really looking to get rich overnight. And so I would say definitely be very careful about these particular plays. With that said, we're going to be having earnings. We're talking about BABA. I had called out BABA back at 230s, 225, 230s, which is about where I got in. I have a little bit of money. I'm looking to add a little bit more. I'm waiting to see if BABA is going to clear these 260s. There was news, of course. There's always news about China doing well. New chart shows China could overtake US as the world's largest economy earlier than expected. I think it was going to be by 2030. I think now they're forecasting 2027, maybe a bit sooner. In any event, it's good to have your portfolio slightly diversified with also different countries. And so BABA is basically my China play. In terms of my long-term dividend, I'm going with Enbridge. Enbridge is Canadian oil. And we're going to be having earnings coming out also on ExxonMobil. We are seeing oil futures are a bit higher today. Looking for a breakout. We're looking like oil is basically trading sideways. And then we are going to be moving up because oil is going to become more expensive as they're reducing the amount of oil that they're basically going to be extracting from the earth. And of course, that will increase the price of crude because simple supply and demand. Demand will remain steady. And of course, the amount of supply that they're extracting from the earth is going to be minimal, of course, for this whole, nonsensical Green New Deal. So I've called out ExxonMobil. I did buy a little bit more the last week, put in a couple $100 more into my play, and we're going to see if ExxonMobil, of course, is going to trade to the upside. With ExxonMobil, it was quite obvious that the stock was going to have a pullback. I'm looking at the chart. You can see that there was a level here, and of course, we were going to experience a pullback here. And then I was waiting to see if we were going to hold in one of these levels, and it looks like we're holding here, seeing a rally back above. See if we clear 46s today. Another stock that I'll be looking at is CRM that I spoke of last week. I'm not quite sure if it's going to break above 230s this week. The stock may trade sideways, does not have earnings for the next 30 days. So it may trade sideways. For me, it's an opportunity. I typically would want to buy it as close to, I'd say between 220 and 210. As I do believe the stock will eventually trade higher. Cloud space is doing very well, especially for the future. This is basically a long-term play for me that I have in my portfolio. So of course I'm going to want to add a little bit more to the play. Also basically with BABA, if BABA doesn't trade above 266 and I do see a pullback, for me, as I saw previously, that BABA basically jumped above that 240. It did trade sideways between, let's say, 225 and 240. So we could see a pullback. And of course, that was basically what looks like about a support of 230 right here, just basically across the line. You always got to have a little bit of movement for volatility, especially with the past couple of days where we've experienced sharp declines, or actually moderate declines. And so, of course, BABA having earnings tomorrow. I believe it's tomorrow morning that they're going to be posting earnings. So we'll have to wait and see if we're going to move to the upside. If we do see a pullback, from me, I'll be looking to buy, like I said, anywhere between like 240, 250. If we do see a break to the downside, I'll wait and see if we do end up holding that 230 levels and then keep on buying Alibaba. It's basically my Chinese play. I think Alibaba is going to do just fine. Another stock to look at, of course, if you're looking for Chinese stocks, is like JD. A buddy of mine had gotten in. I didn't pay attention. And of course, the stock ran all the way up. But we're seeing a little bit of a pullback. I think it pulled back about 12% from the close. Right, so go from the close to where it closed last time. So it's about almost 11%. I would like to see this stock pull back slightly more, maybe into the 70s before I was really looking to get in. So we could see more of a pullback of about 20-30%. That would be my bet. JD is basically another Chinese retailer. So if you're looking to add diversity into the Chinese market, or you could always go with like Baidu. Baidu is another play, but it's run up so much that I would have to see this stock pull back sharply before I try to get in, especially because we're nearing what looks like a huge top, right? So 270 looks like a huge top for Baidu. If I was looking to get back in, I could moderately say like somewhere around 160. Yeah, 160. I'd say about 160, anywhere 160, like 150 to 170. I would probably look to get into Baidu, but it's way overextended, especially because we're sitting here what looks like at the top. In terms of the market, let's looking at the market in terms of our support and resistance. We closed slightly below the 30K mark. And so our next area of resistance would be 5 and then 29. After that, we've got a bit of a fall down into maybe 26K. I'd say the market, if the market were to break 29, we could retest all the way as far down as about 26K. That's just about where the market had a little bit of a tough time. We saw multi-period bounce right here. Here, you can even say here. And then, of course, the market struggled to get above 26K. You can see that huge cluster where it looks like about maybe 3 weeks of trading before the market was able to trade above 26K and then retest on 2 different days, come back up, and then eventually have another period where it retested 26K. And so more than likely, this would be your area. If we break 29, right, if we were to break 29K, more than likely the Dow will try to retest 26K. On the spiders, on the S&P, if we're looking at the S&P, the S&P support is 264, right? So we can see the sideways trading previously before the break. We had 1, 2, 3, 4, 5, 6 trading days where the market could not break 264 on the SPYs, and then multiple days where we tested, especially here on some fairly decent volume day right here where the SPYs traded down. Again, over here we see the exact same thing where we trade down to 265 and immediately the market steps in on a strong volume day and buys it back up. And so that's typically what you look for. A break between 264 would be a retest of 355 and then a nice drop all the way to 340. And so this is what I'll be looking for in terms of adding, where I would want to pay attention to where the market is before I start adding to my positions. Like, for example, you might see the scenario where I recently purchased IBM down here for the dividend at around 118. I think it was 118.37. And so on a heavy day where the market was down 700 points, IBM really wasn't moving. And so it really wasn't until IBM broke, I think 500, where the Dow broke 500, where IBM then started to slide. Up until that point, it was up on the day. I think it was up like 27 cents, not much, but on a down day, it was trading. So there were buyers, right? There were buyers there. And so if you particularly like certain positions, you have to pay attention to how they're trading throughout the day. Is it holding up? Is it acting a bit stronger where the market is pushing to the downside? And so this will let you know I might be able to get into this play sooner than another play where it's basically showing more weakness than the actual market, where more people are selling than they are buying on a day where we're down, but not necessarily down that much. And so those plays that show a little bit more weakness, like for example, if you were in like maybe not JetBlue, maybe something like Norwegian, where there's more possibility to the downside, you might see more selling in a stock like Norwegian that has not recovered than, for example, like an IBM. Or for example, you might see more selling in like a Tesla or in an Apple than, let's say, like in a Starbucks, right? Just as an example. In terms of these stocks, like your JetBlues, your airlines, your cruise lines, these stocks are not going to recover. You could use this opportunity to build up a position in anticipation of them reopening. But really, unless countries start talking about removing restrictions in terms of like flying like for example, here in New York for JetBlue, until they remove restrictions, until they remove the requirement to, let's say, for example, quarantine for X amount of days, these stocks are not going to move. They're going to just sit here and trade in a channel, or they're going to trade to the downside. For JetBlue cannot break 16, because a break above 16 would more than likely indicate that the stock is going to trade to pre-pandemic eras. And of course, that is not the case at this time. So what you're seeing is these stocks basically trade sideways in a channel. Same thing with Norwegian, right? Look at Norwegian basically, for the most part, doing the exact same thing, trading between what looks like $23 and let's just say $26 for the most part. Even though we see a little bit of a move to the upside, it wasn't able to hold it. And of course, it's basically stuck in this 26 to 23 channel. These stocks aren't going to go anywhere, not for the foreseeable future, until we hear more vaccines being distributed, a lot less restrictions on having to quarantine. Like for example, if you wanted to do international travel, you're seeing the opposite, right? You're seeing the opposite. You're seeing countries talk about more restrictions for travel, international travel, requiring a negative test, before you leave, and then requiring another test when you land, and then quarantining for 2 weeks. Like, no one is going to travel to any of these places, any of these destinations, with a 2-week quarantine. It's just not going to happen. People aren't going to waste their money traveling to these destinations, which of course will impact airlines. The longer this goes, of course, the more likely that certain airlines will go under. Like for example, either like American has a lot of debt. American has a lot of debt to it, and so I believe them and UAL are forecasting more layoffs. I haven't heard of a single layoff yet in JetBlue. JetBlue has while it doesn't have as much cash on hand, it has much lower debt, has much lower liabilities, which is why I particularly like JetBlue, based here in New York. So we'll have to wait and see how that's going. Typically for me, when JetBlue comes to about this level, I'll usually buy about $100 and $140 worth, just so I'm literally buying at the bottom of the channel. If JetBlue were to break, I would watch and see how it trades at 13. A break below 13 will more than likely see the stock retest $10. That's basically going to be it. For this, I'm going to get ready for the rest of the market. It's about 8:45. Hope you guys have an enjoyable trading day. Feel free to like, comment, and subscribe, and I'll check you out next time. Thanks for watching.